Tesla and Netflix, the two big tech stocks to start earnings season. Boy, did we get off to an interesting start. Tesla stock down over 10%. Here today, Netflix stock down around 9% or so. A lot of people want to know, are these stocks opportunities to buy right here? Should we be waiting on these? Which of these two stocks will outperform each other over the next year, over the next 5 years? We're going to discuss all those factors in today's video. We're also going to discuss the risk factors. What happens if a recession happens? Which one of these stocks get hit harder than the other? Okay, so yeah, pretty in-depth in regards to just Tesla and Netflix in today's video. I hope you guys enjoy this. I hope you appreciate it. I appreciate you joining me. Thanks for being subscribed, folks. Yeah, quite a day out there, okay? Quite a day. And by the way, Tesla and Netflix, these stocks are so important to the market, not just because they have pretty big weights, relatively speaking, but mainly because they're such huge for sentiment in the market. And these stocks went down here, obviously big today. And look at it sent everything in big tech world down. Look at AMD today. Look at Snowflake, Shopify, Amazon, Meta, Nvidia, Intel, Google, McDougal. Everything got sent down because of what happened here today with Tesla and Netflix. Okay. Alrighty. So first place I want to start out is just speaking about, if you didn't get to see top line, bottom line numbers for these companies, Tesla reported a beat on the bottom line, and they reported a beat on the top line. Top line, bottom line, basically meaning revenue and net income, or EPS. Okay, and so Tesla's more impressive beat was on the earnings per share line. Now, by the way, Seeking Alpha has Tesla beating by about $200 million of revenue. From what I saw, based upon what most analysts had out there, it was closer to a $400 to $500 million beat. But nonetheless, they beat by several $100 million of revenue, and they beat very nicely on EPS. That was even more impressive, to be quite honest. They also beat on a super important number, okay? Not deliveries, not revenue, not EPS, not any of those things, okay? Those are all important, and they pretty much beat on all of those. But there's one extremely important thing this company beat on, and that is margins. They beat on margins as well. So overall, Tesla came in with actually the type of earnings you really wanted to see. They did have a couple worrisome things to say on the conference call. But other than that, like in terms of it, you just look at the base numbers, the revenue, the EPS, the margins, everything came in better than expected, right? Now, Netflix, on the flip side, had a slight miss on revenue. They had a very nice beat on earnings per share, and they had an epic beat on subscriber numbers. Okay, we're switching cameras. They had an absolute epic beat on subscriber numbers. It wasn't even close. It was like they beat by almost like a 3x in terms of what was expected for subscribers versus what they came through at. Analysts had them expecting a little over 2 million new subscribers at it. They had nearly 6 million. That's a pretty shocking number, okay? So nonetheless, when it comes to Netflix, you know, if I had to say one had a stronger earnings than the other, it's really, really tough because both of them had their strengths and both of them had a few weaknesses in there. But ultimately, I think Netflix's EPS beat and subscriber beat was a little more impressive than Tesla overall. Now, if we look at the stocks over the past few years and kind of even few months and how these have reacted, it's very clear what's going on here, okay? So Tesla, this is on the past 5 years, Tesla's massively outperformed Netflix, right? Tesla's up 1,100% in the past 5 years. Extraordinary. And folks like myself and maybe some of you guys, we've gotten to take advantage of that, and we've had a lot of fun in this stock, right? Something like Netflix has been an ultimate lagger stock. When you think about how many subscribers Netflix has pulled in over the past 5 years, how much more revenue they make, how much more profitable the company is, in all those sorts of things. But ultimately, Netflix stock has done almost nothing the past 5 years. The stock's up 20%. 5 years. It's horrible. I mean, that's horrible for any stock. That's really horrible for Netflix, right? Almost shockingly bad. But do remember, 5 years ago, the stock was severely overvalued, in my personal opinion. I used to do videos about how overvalued Netflix was. So just because Netflix hasn't done well the past 5 years does not mean it's not going to do well the next 5 years. Let's put it that way. Because you could have went back the previous 5 years than that, right? Tesla stock did horrible the previous 5 years. It did nothing. Literally, Tesla stock did nothing for 5 years. Netflix stock went absolute beast mode that previous 5 years. So you know what you could have said? You could have said, well, you know what? Tesla's a loser stock. It never does anything. Never goes up. Netflix just keeps going up. So I'm going to put all my money in Netflix stock. Forget Tesla. And what'd you get for it? 20% in 5 years versus Tesla 1100% 5 years, right? And so just understand whatever happened over the past 5 years does not mean that's going to happen over the next 5 years, okay? Extremely, extremely important. I think that is something that a lot of folks misunderstand in the market. They look at these past things and say, oh, Tesla's a great stock. Oh, Netflix, horrible stock. Doesn't work like that, man. Doesn't work like that at all. 1 year. Now, this is where things get really, really interesting. Netflix in the past 1 year is up 101%. And Tesla stock's up only about 6.5% or so, 6.5 to 7% in the past 1 year. That's rather intriguing, but remember, Netflix stock bottomed way before Tesla stock bottomed. Tesla stock didn't bottom until the beginning of this year, versus Netflix stock actually bottomed right around this time actually last year, okay? Now, if we look year to date, Tesla stock's up a whopping 144%. Netflix is up a very impressive, but looks small compared to Tesla, up 48% in the past, basically this year. 3 months, Tesla stock's up 57%. Netflix stock is up 33%. Check this one out. 1 month. Oh man, because of how big the drops were today, they're basically back to no gains for the past 1 month. That's pretty crazy, man. One day knocked out an entire month of basically gains for the stock. Now, since these companies went public, Tesla's up 16,000%. Yeah, it's a hard number to even fathom. 16,000%. Netflix is up about 2,700%. So, by the way, Netflix, that's extraordinary returns, right? It just looks small compared to good old Tesla, Tesla, and what they've put up overall, right? Now, if we look at Tesla, this is really intriguing. So, the company's trading at a 2024 PE of about 60, roughly, based upon what estimates are out there for analysts. But they're expected to have about 28% revenue growth for the company in 2024. Now, people are going to have different opinions. Some bulls are going to have some maybe more bullish numbers. Some bears are going to have some more bearish numbers to say, no, that number's too high, or that number's too low, or that number's too high, or that number's too low, okay? I think they're pretty realistic. We'll see what happens. I think a lot for Tesla, and this needs to be said, a lot comes down to the economy, okay? Tesla's very dependent upon how the economy is doing. What's going on with unemployment rate? What's going on with interest rates? Those are huge factors for Tesla. I mean, absolutely massive factors. Netflix, not nearly as important of a factor, but I can tell you for Tesla, the economy is everything. If you were to tell me unemployment's at 10% or something like that, and the economy's in a horrible place, Tesla's going to struggle in that sort of environment, right? They're going to do better than their competitors, but that's not saying much. At the end of the day, we know what happens in a bad economic scenario, right? On the flip side, if the consumer was to strengthen a lot, if rates were to get in better places, then that could obviously benefit Tesla in a substantial way. So it works both ways, right? Depending upon whether you're strengthening or weakening. Now, this is absolutely insane, okay? Check this out. So Netflix trades at just over 30 2024 PE ratio. Check out the growth rate for Netflix expected next year. Again, analysts have them growing a little less than 14% revenues. Now, this is absolutely insane, okay? This is crazy. Remember the numbers I just showed you. 60, we can call it 60 and 28, okay? Look at this, 31 and just under 14. Half and half. It's basically trading at about half the forward PE and about half the revenue growth that Tesla's expected. My gosh, did the market price these perfectly or did it not? Okay, that's extraordinary. There's really no arbitrage in looking at these two stocks from these two angles here. I mean, it's crazy. It's literally insane. Like, you would think, like, well, maybe one of these would be an outlier in terms of revenue growth versus forward P. No, they're identical. That's freaky, man. That is like freaky stuff there, okay? Now, for Tesla, and I'm a big Tesla shareholder, but the company's between a rock and a hard place, which is a famous expression. I think I might have first heard that from my dad. It's, when you got no good options, really, and you just kind of got to deal with what you got to deal with, okay? You're in between a rock and a hard place. Because Tesla has a horrible situation going on, okay? That it's really hurting them, and it has nothing to do with them. It's just the environment we're in. Here's the deal, okay? Rates are very high right now. They could be going higher. We've heard rumblings about the Fed continuing to raise Fed funds rate. If that happens, obviously it's going to put pressure on interest rates and could obviously make, let's just call it harder and harder to get a car loan, okay? So if rates are high, that's bad for Tesla's business model. On the flip side, if we have a recession, which is something that could take rates down, right? Because if there's some sort of recession, real economic worries, then they're going to start lowering interest rates, right? That's what the Fed does if there's a recession fear. Well, that's also bad, because we know when a major recession happens, you know how many less cars are sold? A lot less cars are sold in a recession, okay? A lot less, right? And so any way you kind of slice it, Tesla's in a really bad situation that they have nothing to do with. They can't control what the Fed does or what the Fed doesn't do. So the only ideal scenario for Tesla in the short term, meaning the next 12 to 24 months here, is a scenario where the Fed starts to lower interest rates at some point in time, but we don't have a major recession. We maybe have a minor recession or no recession. So ultimately for Tesla in the short term really needs a soft landing, just to be quite frank, for obviously to kind of boost up numbers, right? And so that's why somebody like myself, I look at the back half of this year with Tesla, and as a Tesla shareholder, I think it's going to be a tough back half of this year, because if rates keep going higher, it's going to be seen as this is going to continue to hurt Tesla's business more and more. Less customers are going to be able to afford a Tesla. Less customers are going to get approved for a Tesla. And that's going to, ultimately, it will hurt Tesla's numbers, right? And we've obviously heard Elon Musk talk about that several times. But on the flip side, if we start to get more economic worries and it's more fear about recession for 2024, it's not going to be a good thing for Tesla stock either. That's going to send Tesla stock down. So that's why I think it's going to be a tough back half this year. Doesn't mean Tesla still can't go up and maybe, approach 300s or 350 in the back half of the year. But I can tell you, it's going to be tough sledding. It's not going to be like it was in the first half where it just was seemed like every day you made money on Tesla stock. It's going to be a tough sledding back half of the year. I think it's possible Tesla could eke out some gains, but I think it's going to be tough sledding. And I think there's also a potential where Tesla goes down to 250, 225, something like that, okay? Now, on the flip side, we have Cybertruck coming, right? Now, the very, very short term, it's a bad thing because whenever Tesla's having to ramp up a new vehicle, we do know it's very costly and it actually weighs on profitability. But if you're looking at 2024 and obviously future years, this is massive. This is the most talked about vehicle in the history of mankind, okay? And so when we talk about Cybertruck, just understand this is a whole different animal. And the numbers Cybertruck should put up over the next 5-10 years are going to be ridiculous, okay? So it's extremely, extremely exciting here, right? Now, on the flip side, if we look at something like a Netflix, for instance, right? So Netflix, and I told the private group this, right? And by the way, if you're looking to apply to join my private group, that'll be in the description area down there. I might also have it as a pinned comment if you're looking to fill out an application. So Netflix is pretty much a recession-proof business model. That's a great thing for them. Rates don't really matter for them. Recessions, no recession, doesn't really matter. Netflix is such a affordable product, $10-15 a month or whatever, that most people, it doesn't matter. They're going to continue to have Netflix. It brings, most people use Netflix sometimes several times a week, sometimes, every single day, right? And so it doesn't matter what happens in the economy. Netflix is going to be just fine, right? But Netflix has a few things going for it long term, right? And we'll speak about Tesla's long-term vectors in just a minute. So their advertising business are just getting that up and rolling, right? That's a baby newborn business, I call it, right? That has 10 plus years of scaling ahead, 10 plus years of scaling ahead for their advertising business. Don't be surprised if long term they make more money from the people that are signed up for the advertising tier for Netflix than they do for people that aren't signed up. And then what Netflix could do at that point in time is they could go ahead and they could essentially just keep raising the price of the non-ad supported tier in future years, and eventually it's $30, $40, $50, and then people will say, hell with this, I'm just going to sign up for the ad supported tier. So that's a beautiful thing that I think Netflix is doing here that I don't think a lot of people are kind of thinking about over the next 3, 5, 7 years, right? No, their forward P is rather conservative for Netflix. I mean, Netflix is traditionally traded either no forward P or, something with a 50, 100, 150, something like that in front of it. So that's the other good part. Subscribers are coming in much stronger than anticipated, right? Now, there's some risk with Netflix, certainly around the Hollywood strikes and what's going on there. Now, do keep in mind, Hollywood's not the only place they film, especially for Netflix. They use international locations. Obviously, Atlanta's built out. There's a lot of chatter I'm hearing that they're going to build a potential massive Las Vegas Hollywood here in Vegas, not too far from my house, from what I'm hearing. I don't know. We'll see about that. So I think longer term, I think is less worries about that, but short term, absolutely, that could be something that hurts Netflix if they can't produce content because this strike goes on for a much longer period of time, or if there's a scenario where costs are just immensely higher. Also, everyone has tried to get in streaming the past couple of years, so it's very competitive. And a lot of these old dogs are trying to replicate Netflix. It's much harder said than done. They can't do it, basically, but they're trying to do it, right? And so it is something to kind of keep in mind with Netflix. On the flip side for Tesla, right, they have a lot of long-term things that are going for them that are very exciting. One is obviously FSD, right? Full self-driving, where basically you don't have to interact with the car at all. The car takes care of everything, right? The first opportunity I see is obviously selling that on monthly plans. I still think they should offer it at some point for $99 a month. I think it's going to be an absolute, like, almost like an automatic sale if they ever do that. It seems like right now they are selling for, it's either $199 or $299 a month. But yeah, I think if they ever went to $99, I just think it's like a no-brainer for Tesla owners to sign up for that. No, with that technology, not only can they sell it to their customers right now, I think it's $15,000 straight up, or you pay either $199 or $299 a month, but they can also sell it to other OEMs, which is definitely a potential. And I hear they're already in talks with a significant one or two companies in this space about selling their technology to them to basically license the technology. And the third opportunity with FSD is obviously robo-taxi opportunity, where basically it's kind of like Uber, but there's no human inside, and it just picks you up and takes you wherever you need to go, right? So that's certainly a big opportunity. Tesla insurance is a massive long-term opportunity. The insurance business is a great business most of the time. Every once in a while you kind of get screwed running an insurance business, right? But most of the time, like, insurance business is straight cash flow, straight profit machine. Ask Warren Buffett. Warren Buffett knows all about the insurance business, one of the greatest business models you can possibly have, right? So that's a huge opportunity, right? Imagine millions and millions of cars on Tesla insurance. Imagine they even start to insure outside of Tesla over time. It's a potential. A Supercharger Network, that's a huge opportunity. Obviously, more and more Teslas on the road, that's going to mean more and more supercharging needed. But also, obviously, with all the other competitors that are going to, obviously all signing up to use Tesla superchargers, that's going to be, that's going to be a moneymaker for Tesla over time, no doubt about that, right? Tesla service, more and more vehicles on the road, more and more vehicles are going to get old, things break, accidents happen, stuff goes bad eventually over time, as with all vehicles, and so Tesla service is going to be definitely a place to potentially make a lot of money over the long term as well, okay? And on top of that, you have things like obviously Tesla Bot. I mean, there's a lot of opportunities. There's products that Tesla's working on right now that we haven't even seen yet. And so just keep in mind, like, a company like this keeps the pedal to the metal. So a lot going on with Tesla long term that's very, very exciting. Now, which one of these stocks is a better buy, in my personal opinion, for the shorter term and for the longer term, okay? Here's my view. So if we're talking about the next 6 years, right, Tesla's a better buy, in my opinion, right? I think and this is, once again, if you have no position built, right? Let's say you have no money in either stock. I think Tesla's the better buy for the long term. I think you got to be ready to go through a lot of roller coaster rides, especially over this next 12 to 18 months. But nonetheless, folks, I think Tesla's a better buy long term. If we're just speaking about the next year, what stock do I think will perform better? I think Netflix. I think if the market goes down substantially, I think Netflix will go down way less than Tesla. I think if the market goes up very nicely over the next year or two, or we'll just say 1 year, right? I think Netflix is going to go up more than Tesla, because I think Tesla is going to still have that issue about rates that's basically going on there, right? So yeah, that's what I say. I think Netflix is better short term. I think Tesla's better long term. Now, for me personally, I'm much more interested in buying Netflix stock right now, not because of short term or anything like that. It's just like, at the end of the day, I'm already heavily invested in Tesla. And I just started buying some Netflix shares here. I bought Netflix for the first time ever last year when it was like under $200 a share. It was like $100-something, and I made some really good money out of that. Sold, took my profits, and I kind of regretted it. I was like, why did I need to do that? Like Netflix at the end of the day is just a really great company that has a bright future. Like, just buy and hold that baby, kind of like I do Tesla. And so right now I just bought some shares, and I hope it goes down more short term. I'm just not very convinced it's going to go down in any substantial way, let's call it past next week essentially. So we'll see what happens there, but that's kind of my personal opinion. So yeah, hope you guys enjoyed this video. Hope you got some good value out of it. Thanks so much for joining me. Thanks so much for being subscribed. If you're looking to apply to join my private group, then check out the pinned comment down there. You can fill out an application. We can see if you're a good fit to join us in there. Much love and have a great day.